Is construction loan interest tax deductible? Have you ever wondered if the interest on a construction loan can help you save on taxes? This is a great question, especially for those involved in real estate investing. Let's break down the details. First, it is important to know that construction loan interest can indeed be tax deductible. However, the rules depend on the purpose of the construction and the type of property involved. For real estate investors building rental properties, the interest on a construction loan is generally deductible as a business expense. Now, the timing and classification of this interest can vary. For instance, interest that accrues on funds drawn before actual construction begins, such as for permits, surveys, and architectural fees, is typically deductible in the year paid. This is considered a current business expense. Once construction starts, the interest on amounts drawn during the construction phase is not deductible until the construction is complete. After the project is finished, those interest payments become fully deductible again as a business expense related to the rental property. If you are constructing a home intended as a second or primary residence, the rules change slightly. Interest on the construction loan may be deductible as mortgage interest, but only once the home is ready for occupancy and qualifies as a home. The Internal Revenue Service allows treating the home under construction as a qualified home for up to 24 months. During this time, the interest may be deductible under mortgage interest rules, but there are certain limitations. It is also worth noting that interest on loans for land alone, before construction begins, is not deductible. When it comes to using a home equity line of credit or similar loan secured by the rental property to buy, build, or substantially improve the property, the interest is deductible. However, you must keep careful documentation showing that the loan proceeds were used exclusively for eligible property improvements. After the year 2025, the Internal Revenue Service rules may expand to allow deductions for interest even if the loan proceeds are used for general operating expenses or other purposes related to the rental property. For those investing in raw land, interest paid on loans to purchase that land is deductible as investment interest, but it is limited to the investor's net investment income. Any excess interest can be carried forward to future years. This deduction is reported on Schedule A and requires calculation using Form 4952. To summarize for real estate investors, construction loan interest on rental properties is deductible as a business expense before and after construction, but not during active construction. Interest on construction loans for personal residences is deductible only after the home is ready for occupancy. Interest on loans used to improve rental properties is deductible if properly documented. Lastly, interest on loans for raw land is deductible as investment interest, subject to income limits. Understanding these distinctions can help investors optimize tax benefits related to financing construction projects.